Investors climbing a wall of worry as they brace for another round of selling on Wall Street this morning. Let's bring in Chris Hogan, Ramsey Solutions financial expert and author of Everyday Millionaires. Chris, good morning to you.
Good morning, Lauren.
Top question you're getting from customers right now.
Well, I'm talking to people on my show, and the first and foremost thing I want to know is, should they stop investing? And I want people to hear this. It's so important that we grow our money. We have to make sure that we are prepared and ready for inflation. The cost of things are going to go up, and so we've got to make sure that our money isn't stagnant, but we're investing. So I'm encouraging people to stay the course, understand exactly what it is you're investing in, but understand this is a roller coaster ride, Lauren. There are going to be things that are up and down, but history shows us the market will come back up.
Should you pause contributions to a 401k, for instance, or should you increase? Because right now stocks are on sale. We don't know how cheap they're going to get, but they're on sale.
Well, that's exactly right. I tell people, once you're out of debt and you've got a fully funded emergency fund of 3 to 6 months of expenses, you want to be investing 15% of your income. And so depending on where you are and your pace, you may want to look at increasing if you're not at 15%, but 15% is the target. And so really looking at this and understanding, and you said a key phrase, Lauren, things are on sale. When the market is coming down, if you're investing consistently, you're actually grabbing things while they're on sale. So when the price rebounds, and it's going to rebound. We have seen this before when it comes to SARS and all the other things that we've battled over the years. America is resilient, and so is the stock market. It's going to come back.
Chris, do things change, though, for pre-retirees who are probably more nervous than a 20-something-year-old right now?
Well, you're absolutely right. Listen, they've been working hard over the course of their career to put money away for the future, and now all of a sudden they may be seeing some fluctuations and major changes. I want them to take a collective deep breath and understand you've been preparing for this. So sit down with your investment professional, walk through your questions. This is not the time to muzzle yourself. This is the time to communicate. So talk to your investment professional, take a look, and understand what tweaks need to be made. But the worst thing people could do, Lauren, is to make knee-jerk reactions and just do something on a whim. This is what can cause you to lose a lot of money in the future.
Is it the time to refinance?
Well, rates are low right now. As you look at the mortgage rates, where 15-year rates are at 2.2 3/4, this is a time, if you've been in a mortgage for 4 years or more, you definitely want to look at refinancing and sit down with your current lender, look at where you are, and talk about this. You could make some massive changes, and I recommend to people, if you can improve your rate by 1% or more, then yes, it is something you want to take a look at. Understand the closing costs, but be smart. But I'm telling people, do not consolidate debt when you refinance.
So there are opportunities to be had. Chris Hogan, thank you for the time. Good to see you.
Thank you.